Investors embrace the Labor Department's stronger than expected employment report for July. The S&P 500 index and the NASDAQ closed at record highs on Friday. To find out what the jobs report tells us about the economy, we turn to CBS News business analyst Jill Schlesinger. Jill, good morning.
Good morning.
So the market ends on a high note. Do you think it's related to the July jobs report?
Absolutely. This was a much better than expected report. We got 255,000 jobs added during the month. We were expecting about 180, 185. Previous 2 months were revised a little bit higher. And what's really important here is that in May, we had a terrible report, just 24,000 jobs created. In the subsequent 2 months, we came on strong, and that really allayed some fears that we were going into some strange slowdown on the jobs front. We also know wages were up 2.6% from a year ago. And overall, just sort of the fabric of this report was good, broad-based. And that was very important for the market to hear because there were, again, fears of recession were creeping in the springtime.
The wage news is especially good. I'm curious here because the GDP numbers have not been that great, but we've got pretty good jobs numbers. So if you're the Fed at this point, is there a rate hike in September?
Well, it's back on the table for sure, but you're absolutely right. The economy is growing at a very slow pace in the first half of the year, about 1%. So that's about half of what we've seen for the recovery period. And by the way, I mean, we've gone through these weak periods, but 2 quarters in a row, not so much. But you're absolutely right, because the jobs report, the strength of that report, does show that probably consumers are going to keep spending. So we're back on the table for September. I think they'll probably skip September. More than likely, we're looking at December for the next rate hike. It would be the only one of the year.
Does the Brexit fallout concern you? I mean, are the Fed still closely monitoring Bank of England?
There's absolutely big time focus on Brexit. And here's why. Because we know that the UK economy is going to slow down. The Bank of England this past week, day before yesterday, actually cut interest rates in the UK to a 322-year low. 322, guys. Come on. Come on.
They were keeping numbers 322 years ago?
Exactly. So what we know is the Bank of England is pulling out all the stops. They're going to try to stimulate the economy. If things stay contained in the UK, don't spread to Europe, don't spread to the rest of the world, we should be sheltered. But the Fed is keeping a close eye on that because, as we all know, we are an interconnected global economy.
But meanwhile, here, if you're back to the presidential race, if you were looking at these numbers, there's actually kind of something in here for both sides, isn't there?
Oh, absolutely. Because for Hillary Clinton, she says, you see, look at the economy. We're creating jobs, 14.5 million jobs since the job market bottomed out in 2010, wages increasing, broad-based creation across lots of different sectors, even manufacturing added jobs last month. If you're Trump, what you do is you say, wait a minute, we still have the participation rate, the number of people in the labor force or actually looking for a job at multi-decade lows. We're looking at a broad unemployment rate, which includes disgruntled workers and those who are working part-time and want full-time help. That rate's at 9.7%. And he gets to say, hey, not only is that a high number, it's 1.5% higher than it was before the recession. So something for everyone.
And they're both pushing to get those working class votes. Jill Schlesinger, thank you so much.
Thank you.